Hey guys, good afternoon. So today I'm going to just show you what we can do with JATS PT indicator. I've got the E-mini S&P 500 on a daily bar on the chart, and we'll put the JATS PT indicator on here. It's got two components. We have points and levels. So points is the first part, and that is the original PT, and PT2 is the second version of it, version 2. I call it PT2. And so if you just click that and add it to the chart, and you don't make a change of, saying you want the daily, in, you know, daily one, you can put 1 day. If you leave that unchecked, it'll default to whatever value is on the chart. So if you're going to build a strategy, you want to select the time frame that you want the points um, provided for. And if you select OK, you can see that an indicator is on the right side of your chart. And I have this displayed as lines. So there's three plots, 1, 2, 3. 1 is 34%, 2 is 68%, 3 is 95% of the daily range, because that's what we've selected as 1 day range. And you can see that there is a line, a solid line. If you want it like a histogram, just select bar instead of line. Change these to bar. Select OK. And now you can see it looks like a histogram. So you can see here that we've got 111 points, and the slope was going higher. We can maximize this and look at it more closely. So right here on November 12th was the low volatility at 73.96, and then the point range went up to 79.47, 84.07, 90.96. Do you see this? 93.26, and then it sort of flattened out and then really spiked up past 100 points a day. And historically, if you want to scrunch your chart to look to see what happens at 100 points, you can see most of the time, all year, it mainly stays below 100 points a day. So you could say that we are in the extreme where you're looking for that volatility to decrease, right? So now you know that we're in the extreme. And so if we get a contraction in volatility, then you can think that it would be coming back towards historical norms. And just do the scrunch factor, and you can see that this extreme came in to 50, just above 50, 58. This didn't quite get there, but it again got down to like 57. This extreme didn't get very far at all, 90, and then went back up. but when it did crash this one, it came all the way down to 47.50, 47.50. So we could theorize that it would be coming down to 60, 60, 70, or between 40 to 70, 40 to 60, somewhere around there, if it matches the past patterns. And then that would get us that melt up going into Christmas, right? So we don't want to see volatility as high as the current period. So that's one thing JATS PT can do. And it also gives you the 2 and the 3, the 1, 2, 3. So you can use these 1, 2, 3 for your intraday trading, like you can use the 1 for your risk. So 40 points going in for Monday, you would want to use that for your risk. And maybe look for 80 points, 79, 75. If we are going to be going into a reduced volatility, then maybe you would want, that range to stop at 79, 75 or 80 or lower. Anything above 79, 75 going to 100 again would be high volatility. All right. So that's the points or the levels. Excuse me, the points. All right. So where are the levels? I can actually give us the levels that accompany this on the chart. I can give us daily levels or quarterly levels. So I want to show you something. I'm going to remove this. I've already got an instance up here lined up. So here is a 3-month. And you can see that the quarterly range that expires Christmas would get us to 7,000 theoretically for the end of the year, up to 70.87 actually. And I have a drawing object on here. Let me show you what that looks like. Right there. There's your quarterly mean. And you can see that this high volatility bounced on the quarterly mean at 65.23. In fact, that low was 65.25. So the quarterly mean held the forward, long trade. If you're below the quarterly mean, then you're going short, right? I'm looking for shorts to go down. But when you're above the quarterly mean, you're looking to go up. All right. So here, this is the perfect setup to get back to the higher time frame. Now, when you look for 3 month for that quarterly mean, you could also put a 90-day, right, or a 12-week on the chart. So we can add a 90-day distribution as well. And this was calculated on the open, so you can also see that we can do open or close, and 14 period or any period. If you wanted 20 period or 50 period or 1 period, we can do that. So by examining the 3 month, which is the actual trade days in the month, versus the 90-day, you can see that we get an extra set of plots, and I have the ability to put means, or excuse me, tails. Did I say means? Apologize. tails on it so that I can go below the distribution as well. I have format. There we go, formatted. So the open is in solid colors and the close is in dash colors so that we can see the difference. And the algos will trade to both. So we really want to be above the 67.29.25 to go long, ideally. So we'll likely go, up into that level, and then, the algos will decide whether they want to go continue, either in a zipper going through the end of the month or go long. And when the dealer changes the distribution from quarterly to monthly, you can see that they're delta neutral in the quarterly. They don't care, they're just delta neutral. But on the monthly distribution, if we change this to 1 month and 30 days, we're going to get a totally different distribution. So let's do that right now. And so you can see here that where we stopped right on that lower monthly one, and that upper monthly one is at 67.33. So it sort of, confluences with that quarterly one. Will the dealer want you to go back inside that monthly one before the end of the month? And they may not, because if they moved their risk out when we got this down bar right here on the 20th, then they don't want you to go back long inside that range if they had moved risk out. Now they may have not moved risk out and just bounced it, used this as the hedge to go back in and get back delta neutral. But it just depends on how they hedge that. If the hedges are still in place, if we notice on our options platform that there's a lot of puts still down there, then we might not be able to get back inside delta neutrality until the end of the month and then rip it up. But it's hard to say. We've gotten past the OPEX. They may be ready to go long now, irrespective of the calendar days of the monthly session or the 30-day. But often this will, be determinative of whether they go long or short. Not only are we going, range expansion for short, or are we range volatility contraction for longs, we want to see that long contraction. So we don't have it yet. We're still in expansion. We need a contraction at least one day, Monday, close at a lower, level point range to get us into that um, risk on mode back. Because right now we're still in risk off with the range expansion. So this is something that you can do with JATS PT, is look at these higher time frames. So that's all well and good, you say, but what happens on a daily basis? How do I trade this every single day to make money in the market. I'm going to be trading a 1 minute chart. How does this help me? Well, let's put a 1 minute chart down and let's make a few modifications to the indicator that we're looking at. So the first one that I want to do would, instead of be a monthly one, let's do a um, 60 minute. And I'm going to change this to my 60 minute 3 fibs, and I'm going to change this to a 15 minute 3 fibs, and I'm going to put this up so that you can see it. Now you don't know which one is the 60 minute and which one is the 15, but you can tell that the 15 is the lower one and the 61 is the upper one. I should have changed the colors on it. In fact, we can do that right now so that you can see it. So I'll make the 60 minute white so that we can see the difference. So this is just the third PT3 profit target. So these are probability targets. Alright. So you can see that when it gets down to the 60 minute 3 is a place that the algos come in often and reverse it. You see that? And here we broke out of the 60 minute 3. That's a breakout. And it even went into the tail 1.5 two times that 60 minute range. That's where it went, 2 times that 60 minute range. It was a nice 50-point move. Here was a break of the 60 minute 3, but notice that it failed on the 15 minute 3 and came back in. So the rule is that it has to break both to get that runner going. If you're just coming down on the 3 of the 60 minute, you're either going to be looking for a 15 minute or a 5 minute time frame of 3. But just using this alone to day trade is amazing. Once I started adopting this, I started really turning my trading around. And I'm going to put this on, change this. So what I'm showing is just the PT3 and tails with the 50% and 100% below the distribution. So 50% is actually 1.5 and 100% is 2, because you have the original distribution and then one outside. Add them both together and that's 2. So it's 2 times the range, or 1.5 times the range, because you count the original range plus you're adding 50% to make it 1.5, or to 100%, 2 times the range. So this little trick, let me change that third one to a 5 minute. Though I did, okay. And so let me change the color. Let's make this yellow. Now, so you can see that the market, is trading inside. Oops, did I get the other one? I didn't change the other color. Hang on one second. It trades inside that 5 minute three often, down to the 15 minute three or the 60 minute three. So there is that time period progression. You see, here's the 5 minute three, 5 minute three, and then down, 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 down. And then you can see that it goes back to the middle. So you go from the edge back to the middle or to the opposite end, coast to coast. But if you trade this in the direction that you want to go, you can put um, a Donkian channel in here, which gives you a very good range, 14 period midband, to bounce those trades off of. You see what I mean? So using, the hierarchy of the 5 minute, 15 minute, you could put 30 minute on there if you wanted, or 60 minute. And then if you wanted to nest this inside of a daily range, you can have a second, chart up with the daily ranges on it, and then another one with the weekly or the monthly to see, are you above those means going out? And a 1 minute chart is not going to do much for you on the JATS PT. Uh, but if you were to put, I'm going to put this back as a line. If you put a 60 minute range on top of it, if you put your 1 minute range inside of a 60 minute range, you can see that you're inside that 60 minute one, right? But what if you change this to a 5 minute? Because the 1 minute you would want to see it break that 5 minute range. So anytime, let me change this to a horizontal line. Um, right there, that orange, and then set this as a minute 5 for one period, and a minute 5 for a 14 period. And why did I put both a 14 period and a 1 period on here on a 5 minute? Let me drop this on panel 2 also. Alright, because that's the difference, 10 points and 14 points. That's your 5 minute 3 spread. So if I change this to a yellow, 1 period, there we go. This is what I wanted to see. This tells me that it's getting close to the end of its range, of its volatility, and you see how it you see how it got little tiny and the bars got little tiny, but here you can see that it was going long, 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 and the bars got much bigger. So if you hit going straight up past the 5 minute three, look at that, almost two times. If you go from zero to this three and go up, let me put a horizontal line on zero. Alright, if we were to measure, look at this. Look where those algos came in and blocked it. You see that? Or if you lay it on top of the other one, you can see that they started selling it there. Do it either way. But the algos are using these time periods, R-vol and H-vol, and this is just a 1 minute, 5 minute range that I'm showing you. You can do this on a 5 minute, 60 minute. You can do it on a 60 minute, 300 minute, or a daily, weekly, or a weekly, monthly, however you trade. If you're trading for selling premium, you can do this on weekly, monthly, or date the zero DTE to get an idea where to sell premium and whether the volatility is contracting or expanding. I think that's the central key, is you can tell in the higher time frame whether that volatility is expanding or contracting, like I showed you on the daily. And I'm going to be creating a market analyzer to do that for us, to show us the daily, um, intraday, 5 hour, the 60 minute, and the 15 minute and 5 minute, whether it's expanding or contracting, so that you can trade a 1 minute inside that if you wanted to, or you know rely on how you sell your premium and where, on which time frame. But you can see that it's very structured, and this isn't just the end of the day. I mean, it's like this all the time. They trade these time periods, and once you get used to how the market structure is with points and levels, these are actual points on the right side. Now granted, this is a 1 minute, but this is telling you right here that 3.5 to 4.5 points is the most that you can expect for a 1 minute range, right? So if you're going to be using a trading strategy on a 1 minute chart, you want the R ball, the yellow R ball, to be below that if you want low volatility trades, if you're trying to just get a small amount out of the market. If you want, you know, more volatility, then you can set it so that you're trading outside these parameters. And you don't have to, use the three. You could set this up for the twos and trade outside the twos or trade outside the ones. You can set this up so that you're trading, you can select where inside the point range you are, to get the most maximum off of it. So let's look at this, and instead of threes, let's put a 5 minute one on here. So let me make this transparent and put it down as a 1, and I'll show you what I'm talking about. Oops. Alright, so here's the 1. This is just a little tiny, tiny, tiny. Here's your breakout. When it breaks the 1 and starts moving, or it's either going to try to go up long or short from outside this one box. Here's a 5-minute one box. We could make this a 15-minute one box and probably give a little bit better. Look at this. Here we go. So here's a good example. So here was the ones going from the 15-minute one to the 15-minute 3. So you see how the 15-minute one here just stayed inside the box? And then here's an example of it moving out. So, if you wanted to do 60-minute 3 breakouts, or do you want to do 15-minute 1 breakouts? Or do you want the 15-minute 1 to be above the 60-minute 3? Let me show you what that looks like. You can require that the 60-minute 1 be above the 15-minute 1 to be above the 60-minute 3. There, I said it. So here's the 60-minute 3. I'm going to take the tails off, and I don't want this. But I do want this. This is the 15-minute 1. And I'm going to take the tails off. Here we go. So you can see that the 15-minute ones are all inside the 60-minute range. So we're trading a 60-minute range. So we could put this back to 60-minute. Instead of a 5-minute range. And you can see that range spreaded from 1125 to 3950, and that 60-minute between the 1 and the 14. That's a big spread. Okay, but here's what I'm talking about. You see how the 1 broke above the 3? So the 15-minute 1 broke out above that 60-minute 3, confirming that breakout. So I had a confirmation of just flat breaking the first. It broke out of the 15-minute 1, and then when it got to the 60-minute 3, it broke out twice. It stayed inside the first 15-minute 1 box, but then it broke out of that. So here was your confirmation. And you see how it came back and used that 15-minute 1 as support? And then here it broke it again. So here's something interesting. I can put fibs off of the 1, 2, or 3. So you've seen me put these fibs on the 3, but you've never seen me put them on the 1. So look at that. It went right here to 1.5 times the 15-minute range. Look here, it went two times the 15-minute range, right there at the 60-minute 3. And then when it broke that, it went to 1.5, and then it went to 1.5 two times, and it actually went even higher. It went 2.5 times. So I'm going to put 1.5. Oops. Did the wrong one. Up or down, A or B. There we go. Look at that. So that's actually 2.5 times the range. Very algorithmic. Look, right here. 2.5 times the range again. So, having this structure and realizing that your volatility is collapsing, coming back in, where are you going to be looking? You're going to be looking for the middle of that range, or trade, your threes of your 5 minute, 15 minute, 60 minute. So I really, can't stress to you that you're getting the same indicator points and levels, but how you construct it makes a huge world of difference. And so again, let me show you, let me put this on like a 30-minute chart and show you some templates that I've got. Here is a weekly template, and you can see how far. Let me put this on a 60 or 300 range. You can see that it went back to the middle of this weekly range and then broke down very algorithmically. That is 1.25 times the range, and then this below it is also 1.25, so 1.25 below the weekly range. um, but you can see the ones are white, the twos are blue, the threes are orange, and I'm using R vol and H vol. if if I want to see, the daily, weekly, monthly, if I want to see a monthly, I can put, like, I think I've already shown you that. I can put a template up for that. And this tells us, where they are in relation to their bell curve. Inside or outside. When they're inside the ones, they are delta neutral. They're just going to be rotational up and down in here. When they're outside, like they were right here, broke that 2 decisively, this is the key. Did they move risk out? So we came back to test the monthly one again, settled back below it. A little disconcerting, but can we get back up to 67.50 for next week? Will they hold that 67.50? Have they moved the risk out from this 30-day or monthly level and want us to stay down here, and then after December starts, allow you to go back up? Or, and I think that's going to be what happens. They keep you below 67.50, and then we just range trade between here, because they don't care where you are between the 1 and the 3. Just stay inside that 1 and the 3, and then after next month you can go back in. But we'll be able to confirm that with the PT2, and it is everything has to do with the relative nature of how that R vol is to the H vol. So there we go. So you can see when it's outside the H vol, the range is expanding. When it's inside the H vol, range is contracting. When range is contracting, you're inside delta neutral. When range is expanding, you get the bigger bars and opportunity to go outside delta neutral. And so you can see here we had that huge range expansion going outside those monthly ranges. So are we going to go back inside now, or are we going to stay out? So that is the $64 million question. And you can see that R vol is way higher than the H vol. So anytime R vol is outside the H vol, the range is expanding. We just had an up R vol day yesterday, which is kind of unusual. So hopefully that's leading us back inside because, like I said, we hit that quarterly mean, and that is the perfect flip point. It's just dealer has already sold their premium here. That means they're going to be blocking it, blocking market from going back up. Usually is what it means. Anything can happen, right? But but that's it in a nutshell. Points and levels. It's for the Ninja Trader indicator, and I'm having a huge Black Friday sale. You can come over to the website, see about the indicator here, and then here is the Black Friday sale. So normally it's 150 a month, which would include the Substack, a complimentary subscription to Substack. But for the Black Friday sale only, it's the indicator only, so that options analytics is not included. Um, but it's a huge discount, 50% off for the indicator only, 75 a month. If you want a 12-month subscription, it's 60% off, but you would have to buy the entire year, and that is um, one license per um, subscription. It is all sales final, as is where is, and the lifetime license is even the best deal, a one-time purchase. So it's based on a 5-year basis. At 150 a month is 9,000 and 75% off. I mean, it's just huge, and that would be a one-time. Just don't get that at all, but once a year, and it's this time of the year. So again, like I said, one license per trader, all sales finals, as is where is, subject to EULA, software subscription agreement disclosures, and you would have to register the license. So you'll send me your machine ID per these instructions. If you get a new computer or want to move this to a cloud environment, relicense fee, I can change that machine ID for you. But you only have one license per machine ID. So if you want to get two licenses, now's the time to do it, especially on the annual or 12 month or lifetime. All right, kiddos. I hope this answers your questions. Let me know if you have any more questions. Again, I've got templates and can show you how to set up the PT2 to show, contraction or expansion several different ways so that we know with the VIX, um, and the ES, working that together at the same time, and show you how to get started doing that. But just for a day trading template, you can set this up many different ways. I use my own super trend indicators. I use min max. Um, but just, you wanted to use the, say, JATS PT with the Donkian, um, you could, set this up with different time frames to help you make those trading decisions. But trading that 15-minute one with the 60-minute three and the opportunity that in the 5-minute three, the opportunity that that provides for you is phenomenal. So let me know if you like it, and I'll talk to you soon. Thank you so much.